Good morning, everyone. It is Thursday, May 9th, and we are back again for our monthly Arca Crypto Market Call. For those joining for the first time, first of all, I'm Jeff Dorman, Chief Investment Officer and co-founder of Arca, joined as always by Nick Hotz, Research Analyst at Arca. We do a lot of stuff on the markets, as I think a lot of you know. We write weekly blogs, we do investor letters. One of the things we realized as this market matured was a lot of the stuff we do and a lot of the stuff others do is very high level. And that was fine 3, 4 years ago when most people were new to crypto, weren't really sure how to think about this market. But the investor base and the user base has matured. There's a lot more people who are sophisticated, understand the nuances of the space. So Nick and I, every month, want to really dive kind of deeper into the weeds of sort of what's happening, what's driving the crypto markets, where are we sourcing some of this data, where's this information coming from so you can do it on your own. And we'll go through in 20, 30 minutes here talking about the markets, what we're seeing, where we're getting it from, and ultimately how savvy investors can navigate this markets similar to a fund like ourselves. So before we get started, as always, a quick disclaimer. This information is provided as general information only and is not intended as investment advice. You can read the rest of it, obviously, on your screen, but we're going to talk just generically about the markets today. So, Nick, you know me, I love macro, but I also don't think it's that relevant for crypto, but sometimes it's relevant, and we go back and forth. It's clear right now, at least 6 weeks or so, last 6 weeks, the macro market has definitely been driving the crypto narrative. And I'll caution before you get into that I don't think that has been the case for most of the rally of the last 6 to 7 months. Whether you're looking at correlation charts or you're looking at any other indicator, it really has been more of an idiosyncratic rally since, call it August, September of last year, driven, of course, by BlackRock and the new Bitcoin ETF, as well as some new narratives and sectors that have emerged. But no question, last 6 weeks, macro back in charge, right?
Yeah, I think that's the case, and we got a chart here that's pretty similar to one that we had put up last month, but obviously the direction's very different. Last month it was really all about. I mean, it was bond yields rising, but it was also risk assets like the Nasdaq, like crypto going up, and now really the market has kind of gotten a bit frightened about the pace of inflation rising and the pace of that the Fed is pulling back from the assumed interest rate cuts that they were going to make. And so that's really been a hit on both the Nasdaq side and the crypto side, really all risk kind of taking on the chin in April.
Yeah, and I think, going back to 2022, that was obviously everything being affected by just, having a 4 or 5 sigma event with regard to rate hikes relative to expectations, right? We went into 2022, the market was expecting 3 hikes of only 75 bips total, and we got something like, I don't remember, 7 or 8 hikes of 400 plus basis points. So it was such a deviation from expectations that everything, moved in line. You had bonds and stocks falling together, crypto falling, dollar rising, everything kind of moving together. And to me, that was the anomaly, right? I mean, that was not the norm in crypto's, short history. And then we saw 2023 and that correlation died down. But the thing that didn't die down was this correlation between bonds and stocks, right? We've now had 3+ years of basically incredibly high correlation between bonds and stocks. Those investors in a 60/40 portfolio no longer getting any of that downside protection or that volatility protection that they've come to know during the 40-year bond rally from 1980 to 2020. And here we are again, at least for the last few weeks, where it just looks the same, right? You've got crypto down, you got stocks down, you got bonds down, and you've got gold and the dollar up. So definitely a more challenging market for investors, at least in the short term.
Yeah, no question.
So moving ahead here, you mentioned the Fed a little bit. FOMC meeting obviously was last week. Rate expectations clearly changing over the course of the year. I think you and I were both on the same page at the beginning of the year that the market's expectations for how many rate cuts we were going to get this year was way too high. I think it was at the beginning of the year, it was pricing in 6 cuts, and
I think we got 2 almost.
yeah, I mean, I think that was, I think everybody, even the people probably who made those predictions, probably thought that was a too high of a prediction. But either way, pretty clearly here from the chart that the in the darker blue there, that's current expectations versus the lighter blue there of what the expectations were even a month ago. So basically, market and the Fed just throwing cold water on the fact that these rate cuts are not coming anytime soon. And I guess my question to you would be, is this really a kind of a regime change, or is this just a delay? Meaning, if we went from an environment where the market was expecting rate cuts to all of a sudden saying, wait a minute, inflation is way too hot and the job market's way too hot, we're actually going to think the next move is a rate hike. To me, that would be a complete change in expectations. But if we're just talking about, no, rate cuts is still going to be the next move, but it's going to take a little longer than we thought to get there. To me, that's not that big of a deal, right? I think the market, in my opinion, is maybe overreacting to a delay in rate cuts versus an actual about face where we'd be expecting hikes.
Yeah, I definitely agree with the second part. It does seem a little bit overdone. I mean, clearly, like, economic growth has been extremely strong. Inflation has been, sticky high, but like definitely not concerning in any way. And I mean, even if you just look at a lot of commodity prices, stuff that drives inflation, like crude oil prices have been falling, ag prices are all in the toilet. Like, there's not really that much driving, I think, potential like big scare about inflation, and everything else about the economy looks great.
Yeah, and I thought that Powell specifically, a lot of, as usually is the case, right? The market likes to overreact and maybe, key in on things that are maybe a tiny part of the market, but then they make a bigger deal out of it. The market was keying in on stagflation, right? The worst environment.
Yeah.
We're going to have higher inflation and lower growth. And Powell just completely stopped that in its tracks and said, I don't see stag, I don't see inflation. This is ridiculous, right? So the fact that inflation is not slowing down as much as people hoped doesn't mean that inflation is rising. The fact that GDP is not rising as fast as people hope does not mean that, growth is falling. So I think a little bit of an overreaction by the markets. Powell basically said, cool it, this is ridiculous. And, at least over the last week, you've seen markets react somewhat positively to that.
Yeah, I definitely don't see the stag. Maybe a little bit on inflation, but I mean, by and large, I would say he's right.
Okay, so that's it for macro. Let's move on to what really matters, why people are here. Let's look at the crypto stuff. So, is it as easy as this chart looks? Is it just, okay, market rallied because of Bitcoin inflows into the ETFs, those slowed down, market lower?
Well, I mean, this chart certainly makes it look like it. The Bitcoin ETF flows have been the big narrative of the year, and really of a big driver of just price flows into the crypto markets that are kind of creating that wealth effect for the rest of the tokens in the market this year. And yeah, you can see the correlation pretty strong here with those BTC ETF flows. I would note we've only got that, I think, through late April. So we have seen, a couple of days of positive, even in GBTC, which has been, a pretty consistent outflow for the most part in the past. So maybe starting to see that turn a little bit, not reflected in the chart right now.
Yeah, and we didn't put a chart in here, but it's worth noting that some of the 13F filings are starting to come out, which show holders list of securities. And because the Bitcoin ETFs are all brand new, this is the first time we're seeing them. And there's been some massive institutions that have already started to build pretty big positions in the ETF. Susquehanna being, I think, one of the biggest, over $1 billion they added in the last quarter. Again, not necessarily a real-time indicator because it's a delayed data, but as that stuff starts to trickle out, I think that's encouraging for others who are starting to think about it. So we'll definitely have to be watching these flows going forward. But I think, if you just go back to where we were 6 months ago when we were just talking about whether or not the ETF was even going to actually happen, I think if anybody had told you were going to get, basically 2.5 straight months of inflows of about $10 billion and then have a little bit of outflows, I think people would have been jumping over the moon at how exciting that would be. So, it is interesting that GBTC has even had some inflows in the last couple of days. Obviously, even if we don't have massive inflows, at least the outflows stopping could put a positive sentiment under the market. But let's talk about that. The Bitcoin halving happened this month. It was something that a lot of people talked about, ahead of time. It's one of those things that you talk about up until the halving, then the halving happens, then you don't really talk about it for 6 months. Then all of a sudden you look up, Bitcoin is 3 times as high, and you go back to saying it's because of the halving. But what was different about this halving this year, even though, again, it didn't have any sort of a price impact, as it shouldn't, because this is more of a longer-term thing than a short-term thing. But what was different that you saw about the Bitcoin halving?
Yeah, so there was this interesting launch that it was called Runes, that occurred exactly as the Bitcoin halving happened. And so there's been this concept called ordinals on Bitcoin that have been taking place over the last year, where it's kind of this renaissance of development back on Bitcoin. Ordinals are kind of like NFTs if you compare it to Ethereum land. Well, this new development was called Runes, and that's kind of more like Ethereum tokens in Bitcoin land. Most of them are pretty much just meme coins right now, but you did see an absolute, mountain of interest in trading these, trying to get the very first ones that were created right after the halving. And so here we got this awesome chart from Glassnode showing, Bitcoin price going back all the way to 2010 here, and then fees in dollars, and you just see the massive spike on the right side that came from everybody trying to get those ordinals on, or get those runes as the halving took place. So you saw massively beneficial for the Bitcoin miners. I think that was a surprise to a lot of the equity analysts who have no idea what this is going on here. And yeah, it was definitely made it a halving that was a bit more interesting than usual.
Yeah, for sure. And we, I think the last couple of months we talked a lot about the Bitcoin miners. Shout out to Alex Woodard on Arca's team, who's done a lot of work here. This is something that's brand new for the miners, right? This new source of revenue beyond just actually mining for the new Bitcoins, but being able to get this transaction revenue as well. We ran some miner sensitivity analysis. We didn't put it in the slides here, but basically, if you're bullish on Bitcoin post-halving, you should be owning the miners as well, because most of these miners have 2, if not 5x upside in terms of bottom line profits if this continues at this pace based on higher prices. So very levered upside to the miners if you believe Bitcoin is going higher and you believe that any part of this transaction revenue due to runes and ordinals is going to continue. Okay, so Nick, here's the real question. We've been talking about the bull market, as has most people, almost like a foregone conclusion that, oh, okay, everything happens in 4-year cycles. Macro market is pretty strong, or macro backdrop is pretty strong. You've got an election year, basically foregone conclusion. Prices are going higher. Everyone's happy. Last year, 100% plus returns in the market. This year, hot start to the first quarter. It's a raging bull market, but this chart says otherwise. What's going on?
Yeah, you can almost feel the difference in sentiment between the people who are kind of more dipping their toes in the water and are really just into like the Bitcoin and Ethereum, to the people who are really degenerate in there, like buying really the long tail of stuff. And you can see that absolutely reflected here. So we've got the top 200 tokens equal weighted here. So not really looking at market cap, just equally weighted. And you can see the prices are all the way down back to where they were basically at the beginning of January. So really showing like those long tail of tokens have really, it hasn't just been an April story. It was really starting in early March, have kind of peaked and are all the way back to those early levels.
I think it's interesting, right? Because again, last year, great year for the market. Is certainly a bounce back year after FTX in 2022. Like I said, most indices up, around triple digits last year, and then hot start to this year. You've got Bitcoin up 45% for the year. You've got the Bloomberg Galaxy Crypto Index up 30%. You got the S&P X Mega Cap Crypto Index up 25%. All signs are pointing to this being a full out rally. And then you look at a chart like this and you're like, well, it's actually pretty selective rally. So you basically have equal weighted back to where we started the year. And in some cases, there's a lot of tokens that are even down on the year now. Going to the next slide here, though, large caps definitely holding up a little bit better. It looks like relative to maybe small caps and mid caps. And then, maybe you just have sort of a hierarchy here, right? Which is like Bitcoin is outperforming Ethereum, which is outperforming large caps, which is outperforming small caps. Is that is that the easy narrative right now?
That's pretty close to where we are. Yeah, and I don't have the exact changes here, but it's something like, I think it was minus 42% on the equal weighted and only minus 24% on, this is the market cap weighted, so weighted by the size of the coin. So this is going to be predominantly Bitcoin. So yeah, I mean, I think that structure is pretty close to how it is.
Yeah, and shout out to our friends at Artemis providing the data for this year. Yeah, so it's definitely been a story of the haves and the have-nots for sure this year, right? This is not a broad-based 2020, 2021 type rally yet, right? This is very, very specific to certain assets within the digital asset market. And going to the next slide here, I think part of the issue with why we're seeing such a dispersion right now is, there's a lot of newly issued tokens, and this is a little bit of a double-edged sword, right? On the one hand, it does show that this is a healthy market, right? Maybe not a raging bull market, but certainly a healthy market, because you wouldn't see new token launches if it wasn't a good market, right? And very similar to the debt and equity world, right? You don't see a lot of IPOs if it's not a good equity market. You don't see a lot of new bond deals if it's not a favorable fixed income market. Same thing here, right? You're not going to see all these new tokens launched if it wasn't a good market. So that's the positive. On the negative side, these launches have been just an unmitigated disaster, if you ask me. In fact, for those who actually read our weekly blog on our website, ar.ca, that's our two Satoshis. For the last 2 weeks, we've been talking about these new issue launches. I was actually on Real Vision yesterday talking about the launches. It's been a disaster, right? And you can look at the chart here. A lot of the problem is that for some reason we're still using the Sam Bankman-Fried playbook of low float, high FTV launches, where you just put a tiny sliver of the tokens out there with some market makers. The market makers have no skin in the game because they're getting tokens for free. They're listing them on exchanges like Coinbase and Binance, who have no skin in the game because they're just listing it. They're not actually running as a book runner or an investment bank. They're putting these tokens out there at incredibly high prices that nobody wants just because that's where the last venture private round was marked. And these things go straight down. And on top of it, you have these massive amounts of supply coming in the future. You can see there only about 13% of the actual float of all these projects in the last month are even out in the market. So to me, this is a big problem, right? On the one hand, everyone likes shiny new things. There's a lot of new sectors, whether we're talking about Bitcoin layer twos, or you're talking about AI, or you're talking about real world assets, or new staking derivatives. There's a lot of cool things happening in the market, and people want exposure to these tokens, but it's not helping the market when these launches are just botched one after another. So again, we're not going to take too much time here, but if you want more detail on the botches, go read our blog. But to me, this is a big part of why we're seeing this dispersion in the market is there's a lot of new supply coming that is sucking the wind out of other projects that may be doing better if it wasn't for these egregious amount of new supply. So anyway, more on the positive side, though, going to the next slide here, though. But where are you seeing growth? Like, where is the excitement happening? Even though April was a bad month, you had a big market sell-off. You had a lot of leverage liquidations. You certainly had some reasons for the market to go lower, whether that was the slowdown in the Bitcoin ETF or Solana having some blockchain performance issues, or the expectations of pushing out rate hikes, rate kites, et cetera. But there's got to be some positive things going on in the market. What are you seeing?
Yeah, I mean, definitely one area we're seeing some activity is in DeFi, surprisingly, which has been an area that I think has been relatively stagnant or like lacking a lot of true innovation in the past. I think recently we've seen a fair bit going on that I think gives you some reason to get a little bit more optimistic about this sector. So we've got this Masari here. They've got this tagged as RWAs. Some of these are kind of iffy RWAs. I would say this is broadly kind of DeFi related things. A couple of different protocols coming to market recently. Eigenlayer is one that has been absolutely a huge launch. There were some questions about when they did announce their token as well, how that was going to be distributed. But overall, something that has garnered a ton of staking in their project, and a lot of money going into there. They're going to be using that to secure other applications and other blockchains. So you can generate a large source of native yield from that. Another one is called Athena. They're doing a decentralized stablecoin. They've got basically it's kind of creating a structured product where they are taking the yield from decentralized exchanges and putting it back into the market and putting it into a staking yield for their stablecoin. So you're seeing a lot of growth in these areas, and maybe starting to see some way to bring yield and bring leverage back into the DeFi market, where it really hasn't been so far during this bull market.
Yeah, and I think you hit on Athena there for a second. I know for those who know Athena, they hear the word decentralized stablecoin, they freak out. They think it's going to be like UST and Luna, very different product. I think one of the things that I'm so excited about is, you continue to have just misinformation about the crypto markets, right? Everybody lumps it into, do I want to be in crypto or not? It's a very binary, very polarizing topic. If you look at something like Athena compared to like a Bitcoin, and it's apples and oranges. I mean, it's not even close to the same, right? You have Bitcoin acting as a currency or a gold-like, store of value, I think it's something like Athena, which is, basically just doing a basis trade that you've seen for 100 years and finding a way to give you that return inside of a token, right? The token itself and crypto itself is really just a wrapper or a package that you can put anything inside of. And Athena figured out, okay, well, if you're going to have perpetual futures that have a high funding rate where you can short that and clip a yield, and then on the other side own the asset as collateral that you're earning a staking yield on, and we can package that basis trade into a token. I mean, that's some of the brilliance of crypto. So, anybody who's pushing back and saying that there's no innovation, there's nothing real happening, like this is real. This is what finance is, right? It's about packaging and repackaging information only and returns. Only you can now do it in a token and spin it up like that. So pretty cool idea from the folks at Athena. I'm not sure it's ever going to get to the size of like a USDC or a Tether, but certainly something on the lines of like a Maker or a DAI, something a little more niche and DeFi related. Certainly a cool product, certainly a really cool use case of tokenization of assets. I think this next slide here is probably my favorite chart that you put in here. Even in a month like April, where we tend to see a lot of reflexivity in crypto, right? Which prices are down, and then trading volumes are down, DEX volumes are down, transactions are down. And it's hard to figure out which one causes which, right? Is it the transactions and volumes that are down that lead to price down, or is it price down that leads to the transactions down? But one thing is that stablecoin transactions are not slowing down at all. And I think historically, the growth of stablecoins, both from an AUM standpoint and a transaction standpoint, have had a much bigger correlation to the health of the market than some of the other things. And I was pretty surprised when I saw this, that basically everything else down in April, and here are stablecoins rising, as if nothing's happening.
Yeah, I mean, this is from Allium. It's a little hard to see the y-axis there, but that's 140 billion you just crossed in stablecoin supply. You can see some of these charts also going around, comparing the numbers to Visa in terms of total transaction volume and things like that. I mean, we've said it before, but stablecoins definitely still crypto's biggest use case.
And you look at, I mean, this is something that people dismiss as well, right? I mean, that left side of that graph there is only 2020, mid 2020. I mean, to go from basically zero to 140 billion in 4 years. And also, we talked about, some of the small caps and mid caps struggling. Like Bitcoin, one of the few tokens that are, a few coins that are actually has surpassed their all-time highs already, even though we've since retraced. AUM of stablecoins is the other, right? So you have multiple things in the market now that are already back above or at their all-time highs, even as many other coins and sectors still trading 50 to, in some cases, 60-70% below their all-time highs. Moving on here. Oh, sorry, go ahead.
This is one that we got from Dune Analytics as well. Just looking at some other areas where you're kind of seeing continued growth as well. So this is a chart of active users on Base, which is the Coinbase
the next slide
layer 2. Yeah, right here. And yeah, we can see that a lot of the other layer 1s, layer 2s have seen pretty large decline in activity over the last month here, but Base has really maintained it. They've got a marketing effort going on right now to really promote that as an entity, and they've also got this new wallet feature. I think they're calling it the Smart Wallet. But basically an easier way to offboard from the Coinbase exchange as just a normal Coinbase user to crypto and be able to use some of those applications, being able to use Base in an easy interface that's not as scary as some of the other crypto interfaces that we have.
So what's I mean, put you a little on the spot here, maybe a little more speculation than data for this part here, but what's driving this, right? Is this because Coinbase just has the biggest reputation and the most business development people and therefore can onboard more developers? Or are there specific apps that are just deciding that Base is a better L2 to build on and want to grow? Like, if we look back a year from now or go back a year ahead and look back and we see this chart continue, like what is going to be, in your opinion, the driver of this continued growth and success?
Yeah, I think it's a bit of both. I mean, Coinbase definitely has the clout. You are seeing some native apps start to do really well though. Farcaster being kind of the prominent example. Don't have the chart here. It would have been a good one probably to grab, but they've got something like 100,000 daily active users. They're claiming Farcaster is the decentralized like social fi or decentralized social media type protocol. And one of the prominent project on there is called Warpcast. They just had their conference last week, and they've had quite a bit of success there. Just creating something where you can have the big innovation is called frames, where you can kind of create developments within tweets almost. It looks a lot like Twitter, but you could develop different sorts of content, and it just gives you a lot more flexibility than how Twitter normally does.
Nice. All right. So, certainly be on the lookout for more apps built on Base and driving some of this continued flow. Maybe we'll come back to this chart in a couple months and see if it looks similar. One of the things, Nick, in one of our internal research meetings a few months ago, when we were talking about if this is a 2020-21 type market, looking at the next slide here, to get people a little some bullish hopium here, you had mentioned that if Solana looks anything like Ethereum in the last cycle, you're talking about $600 to $700 price of Solana, and basically a massive beta to Bitcoin and Ethereum on the upside. At the time, we were like, that's great, but you got to have some real traction if that's going to happen. It's not just going to happen because the market wills it there. Guess it looks like it's happening. Is this what you're saying here, that Solana is starting to come into its own and grow into this market cap and future market cap?
Yeah, I mean that's pretty much what we're seeing. I mean, at the time, I think the only one you could really look at and say, okay, this is at all comparable was transactions, where Solana definitely was ahead of Ethereum, in transactions per day. But I mean, you've seen daily users per day, cross on Solana, and now you're seeing fees really start to get close. I think we mentioned something about this last time, but this is MEV, so it's kind of like arbitrage transactions that occur on Solana. It's one of the ways that validators, the people who are securing the blockchain, get paid. So if an arbitrage happens, they're able to capture that if you're staking and securing the chain. And so we've seen the amount of MEV just go bananas on Solana recently, and that's been leading to a lot more fees getting paid to a Sol validator. So, one of the big questions that we had, I remember from that meeting, I was not comfortable with was, hey, is Sol even monetizable? Is this like an asset that's valuable? Because you got this awesome tech, you got this awesome blockchain that people care about, but like even the founder says, this isn't really money. But we're increasingly seeing, people like there is a reason to hold Sol. There's a reason, because you're getting some monetization here in fees, and it's coming from the apps people are using and people using like DeFi and all these other things on the blockchain.
Absolutely. So we'll see. I mean, look, I think a lot of people spooked by the move in April. We had 6 or 7 straight months higher. I was looking at some data the other day. Even in 2020 and 2021, only 2/3 of the months were positive. The other third were negative. Bitcoin has had 20% corrections 4 times now in the last 12 months, even though the direction of Bitcoin has largely been just straight up since January of 23. So not abnormal to see a little pullback in April, already seeing a little bit of strength here in May. But certainly some of these slides showing, the growth of stablecoins, the growth of new issue supply, the growth of RWAs, the growth of Solana, the growth of Base, certainly a lot to sink your teeth into. Obviously, all these sources of data that we're looking at Arca are available to others as well as you want to learn on your own. But I think it certainly will be interesting to see if price starts to follow some of the fundamental growth we're seeing in different areas of the market. So I appreciate the time, Nick, and all of our viewers. I think we'll end here right at 30 minutes. Obviously, please feel free to check out all the educational materials we have on our website at ar.ca. You can also find us on social. Nick, you can be found at Nick_Hotz. You can find me at jdorman81. Love to hear from you. Love to hear what data sources maybe we're not using in these slides that we should be, what parts of the market are attractive that you're looking at, how we can be helpful here. And we'll be back again next